Welcome back to Pulse on the Market. I'm your host, Jaden Brains, founder of Brains Capital, and this is the show designed to help you guys stay in the loop with anything regarding stocks, crypto, real estate, whatever it be, information to keep you guys in the loop to make better, more educated financial decisions. Perfect. So I hope you guys enjoyed the weekend and have been enjoying March Madness. It's been pretty crazy in the tournament and also in the markets. And we see that the Dow today is down 0.5%, the Nasdaq's down 0.04%, and the S&P is down 0.25%. So a relatively neutral day. We got the 10-year up 2.73%. We usually don't like seeing that because it does well in high inflation environments, right? So not a good sight to see that rising. But as you guys have heard on previous episodes of the podcast, that the Fed came out and they indicated that they're still looking at 3 rate cuts by the end of the year, which is big news for the market. But I've been thinking recently, I'm not sure exactly how much rate cuts truly affect the market and how much impact. I'll be doing more research on that to see if they truly impact it as much as we think it does. And I'll make sure to let you guys know once I'm conclusive on my research. Let's get into some big losers and big winners for the day. So we see that the pharmaceuticals are kind of taking a hit. I saw that Bernie Sanders was lashing out at the weight loss pharmaceuticals for charging far too much. He apparently, if Novo Nordisk were to charge $47 for the weight loss drug Wegovy, that they a year they would be profitable. They're currently charging over $10,000 a year just to be on the drug, and a lot of people would think this is absurd. And how could they do this? It seems inhumane to have this high of margins and to charge the American people this much, right? But in reality, I mean, we have to look at it. I mean, so much research and development goes into the product. It's not just they just crank it out one day and just start charging high margins. No, so much goes into the process of making these drugs before it hits the market. And so to recompense companies for going through this huge process to create these drugs, they're able to charge high margins like this. And it's to incentivize other companies to make these drugs as well, because if they weren't allowed to do this and this was impossible, then no one would really want to go through those years and years of testing, of development in order to develop these drugs just to make very low margins. So we can't really be too mad at that. It's just the way this industry works, this sector of the market. And hey, I mean, looks like we're going to have to pay those prices, but unless you want to go and develop your own drug, but heck no, there's no chance I'm doing that. So the biggest losers for the day, we got 3M down 14%, Universal Health Services down 2.6%, Walgreens down 2.2%, AT&T down 1.8%. I think on the year to date, they are down around 6%. They do have solid dividends, right? But I mean, it's a trap. It's a value trap, 100%. Because if we look, let's take a look at their stock. Their ticker is T, just the letter T, and I mean, year to date they're up 3%, but over the last year they're down 9%. And sure, let's take a look at their dividend. So their dividend yield is 6.3%, but if it keeps continually dropping year after year, you're not making money on these dividends. It's not worth it. Unless you're just going for that income generation long term, you don't think AT&T is going to go under anytime soon, and you just want that consistent 6%, then yes, that would be a solid investment for you. Let's see, Eli Lilly, similar to Novo Nordisk in the weight loss industry, they're down $20 a share, down 2.6%, down to $7.57. This is good for people looking to get into Lilly because it is a solid stock and it's got a lot of upside potential. And days like this where it continues to drop could be potential opportunities for people to invest in Lilly and enter into a position. And because I'm bullish in the long run on Lilly, I think they're going to be very solid, very profitable. And they're a little ahead of the game too, them and Novo Nordisk. But we also have companies that I've been looking at like VKTX. This is Vikings Therapeutics. And they're down 4.6% as well today. But I think that they have quite a bit of potential as a company. And I think that any day now they can get bought out by Novo Nordisk or by Eli Lilly, these companies that want more market share. They want to prevent competitors from taking it from them. So I could see them getting bought up and seeing a huge spike in the stock price, which I would look at liquidating after that. But I mean, they've been having really solid test results on their oral drug. They have like an oral pill that they can take in comparison to, or in contrast, to the injection that Novo Nordisk and Eli Lilly do. And so they're just working on the pill, and they've been seeing solid test results. And so we see, a lot of institutions are raising their target price for them. And, they have a lot of upside potential as well. They're entering into this market that is primarily dominated by Novo Nordisk and Eli Lilly. And I think that they have the potential to take a lot of it, especially with this new technology on the oral pill. A lot of people are going to prefer that over having to inject themselves with the serum. NVDA, we're starting to see NVDA crack a little bit. They haven't been going on runs like they once were. They're down 1% today, down $8 a share. They were up a couple percent, but that's NVIDIA for you. They're up to $922. Now they're down to $894. So, yeah, this is just not looking too great for NVIDIA. It's not that they're peaking and this is the end of the growth for NVIDIA. We're just seeing some reallocation of funds from people. People are starting to take profits from NVIDIA and reallocate them into other areas, into high growth stocks. Once again, they're looking for that next NVIDIA, that next huge stock to just skyrocket, right? We're seeing that SMCI, they were doing well earlier today as well. They're up to 1070 around there, give or take, a share. Now it's down to 1030. They're still up 2% on the day. And SMCI is one of those stocks where one day they'll be up 10%, up $100 a share, and then the next they'll be down 100, 120. And if you can't see past this fluctuation and you can't see the long term for a stock like this, then you're just going to get eaten live. Doing in between long term and short term would be brutal for SMCI if you don't have just that mental fortitude to see past it or to withdraw. All right, Boeing once again down 1.5%. They've been getting clobbered day after day. It has not been looking good for them. I wouldn't be. If I were to invest, I'd be shorting it. As of right now, that's personal opinion. But I still wouldn't do that. You missed. I think that they do have potential. They're switching leadership at the end of the year. I don't think Boeing is doomed. They just haven't been having a lot of bad news reports that's been taking them down. Year to date, they are currently down 26%. Similar to Tesla in just having a terrible start to the year. Tesla was the biggest loser in the S&P 500. And year to date, they are down 31%. They're down, how much today? 2%. Another 2%. They're down to 172 a share. And this is sad because not too long ago, they were up to, what was it? Back in, the start of the year, they're at 266. Now they're at 172. They've just been getting destroyed, just getting clobbered. So bad news for Tesla. It's been looking rough. Let's see here. All right, let's get into some news stories for today. So the S&P 500 had its best first quarter since 2019. Good news for the S&P. This is driven by resilient corporate profits, AI enthusiasm, and rate cut hopes. And it hit 22 new all-time highs in just one quarter. And the big question was, when are we going to hit the top? That's what everyone's been wondering. No one knows for sure. And it seems to continue to rise. Today they are down. The S&P is down around 0.2%, nothing too crazy. And they've just been having good week after good week, and it's been looking good for the economy, for the market in general. We're going to see with the jobs reports that might sway it in either way, either direction as well. So we'll have to see what happens with that. Let's see here. So AT&T, it was projected around 2019 or earlier that they had this data breach, but they reset passcodes for 7.6 million current and over 65 million former customers due to a data breach. So this was leaked around 2 weeks ago that they had a data breach, and this is horrendous for companies. But it's actually so common for this to happen. We've seen a lot. We even saw OnePass. I don't remember the name of it. It might have been OnePass, but it's literally a password holding company, and they got breached, which is ironic. They're supposed to be secure. They're supposed to be the ones protecting you from this kind of stuff. And we just realized how easy it is for companies, major companies, to get hacked. And it's kind of sad. UPS outs FedEx. This is big news for UPS. Their stock ticker's UPS. It's United Parcel Service. And they are set to become the primary air cargo provider for the United States Postal Service, taking over from FedEx after negotiations for a new contract fell through. So their stock was up pre-market. FedEx was down pre-market. You know how it is. And so this is good news for UPS. And I guess they have a contract with the USPS, the United States Postal Service. And they are now the primary air cargo provider. So this is big news for UPS. Let's check the stocks out and see how they're doing today. So UPS is currently down 1%. And I mean, the entire market has been down, so it's kind of pulling it with it. And let's check out FedEx. So let's see here. Go back to it. So FedEx, their ticker is FDX, and they're currently down 2%. So they're down more than UPS. And this contract should be pretty good for UPS. All right, let's see here. Amazon. So they plan to invest nearly $150 billion over the next 15 years in data centers. So they are supporting AI and digital services growth, and they aim to maintain its cloud computing market lead. So they've been dominating that, and $150 billion is a lot of money. And so this is good news because usually what powers this are companies like NVDA, SMCI. They're all intertwined with this. And so we should see some huge growth out of the parenting or like the partnering companies with these data centers as well. All right, U.S. Steel. So Nippon Steel is emphasizing its long-standing presence in the U.S. as it proceeds with its proposed $15 billion acquisition of U.S. Steel. So Biden does not want this to happen. I believe that Nippon Steel, however you say it, is a Japanese company, and Biden is opposing that. He does not want them to be able to buy out a U.S. steel company, and so he's been opposing that, but they're still being pretty persistent with it. Okay, other than that, try and pick out the best stuff for you guys. Huawei is the smartphone computer, or the smartphone company that does smartphones, right? And this has been one of the major downfalls of Apple, was starting in China when Huawei started growing, and the sales of the iPhone started to go down. So Huawei reported that its net profit for 2023 more than doubled, which is big news. And it attributed to improved product offerings and 9.6% revenue growth. And so, I mean, their smartphone and auto businesses also picked up. And this has been clobbering Apple quite a bit, and this has caused the iPhone sales in China to decrease because, I mean, China was one of the major buyers of iPhones, one of the major providers for it, and now we see companies starting to come in and steal market share. I mean, it's been happening with other companies, not just smartphones, but we've seen companies like Deckers, which is one of the newest S&P 500 companies. They started to steal market share from Nike, and other companies have been sneaking in here, where Nike, Apple, Tesla, these companies used to be just soaring. They used to be the best of the best, but that's the whole thing with the market, is that there's always going to be companies trying to take market share from the biggest industries, and they're going to be intruding, and you can't protect it forever. And the goal is to stay up to date with it and to get into those companies that are growing, are taking market share from these bigger companies, right? All right, let's see here. Gold hit its new all-time high, so they reached a new all-time peak as U.S. data suggested a slowdown in inflation. So spot gold surged to $22.54 per ounce, and the gold futures climbed to $2,275. So gold has been surging recently. Let's see. Bankman-Fried, he was the founder of FTX, Sam Bankman-Fried. He's been sentenced to 25 years in prison in order to pay $11 billion in forfeiture for his involvement in a securities fraud conspiracy that led to the collapse of his cryptocurrency exchange and hedge fund. So, I mean, he was caught in a scam with, his company was FTX, and so $11 billion fine and 25 years in prison. There was actually an outrage from the people involved in FTX. They said that he should have got at least 50 years. They're upset that he only got 25 years just because of how much damage he incurred on the company FTX. And a lot of people trusted in it, and they just got destroyed along with Sam Bankman-Fried. And it was a pretty big scam when it happened, and now he's finally getting sentenced. All right. Nothing too crazy with our news reports or IPOs. We have officially entered the second. Sorry. yawned. We officially entered the second quarter of the year, and pretty soon here in around 20-30 days, we'll start to have an influx of earnings reports, which is my favorite time of year. I love earnings season. It's way too fun for me, and I'll make sure to keep you guys updated with that. A little update on crypto. So let's take a look at Bitcoin here. I know it's recovered a lot from its losses. It's down today 2.4%, because I believe it was at around, it went back up to around 72,000. Now it's back down to 68, but it was at 60,000 not too long ago. So it crumbled once again. It hits an all-time high, and then it pulls back, it drops, and we're starting to see it recover a little more, and it's at 68,700. Might not be a terrible strategy to sell right when it hits its all-time high and buy it back just a couple days later. Do not do that, actually. This is not financial advice. It's just been a historical thing that's been happening recently. And, not too historical, but yes, in the past. So the past few times on this bull run of crypto. But that is it for today. Thanks, guys, for listening. My disclaimer, once again, this is not... Let's see here. Actually, let me pull it up. But yeah, this is not financial advice whatsoever. It's all gambling. It's all risky. Don't sue me. And especially if you make decisions based off this podcast, because you really shouldn't make decisions based off your own research. This is just stuff that I've been researching on my own. And it's all risky. And I'm not responsible for any losses or damages based off actions taken based off this podcast. Love you guys. I will see you tomorrow. And have a phenomenal Monday.